A private placement is a way for companies to raise money by selling securities directly to a select group of investors. Unlike an initial public offering, or IPO, these shares are not sold on open stock exchanges to the general public. Because these deals carry more risk and less regulation, they are usually only available to accredited investors. Companies choose this route to avoid the intense scrutiny and high costs associated with filing public registration documents. The main difference is access. Public offerings are for the masses, while private placements are restricted to specific individuals or institutions. Public companies must follow strict SEC disclosure rules, whereas private placements have a much lighter regulatory footprint. Always remember that these investments are often locked up, making it difficult to cash out on short notice. Private placements are complex tools for sophisticated investors. Keep learning and consult a professional before moving forward with any capital commitment.